All right, KG, it seems like it is still game on for the Bulls. But, you know, I couldn't help but notice that obviously it wasn't full participation when you look at the S&P 500. What does that say to you?
Yeah, I mean, we are seeing a little bit of a little bit of a rotation here when it comes to the S&P 500. And you're right, the market breadth yesterday wasn't as strong as what you probably would like to see, especially trading at all-time highs. And if you actually kind of look at the SPY, you are seeing volume actually decline. So there's a little bit of a divergence there. But obviously, we are still making higher highs, higher lows. Technically speaking, the trend is still bullish, but you are seeing maybe some weakness and pockets of weakness. What you got to keep your eye out on right now is going to be communication services, which has kind of been a bull flag pattern, just meaning that we were in a bull trend, but we are seeing a consolidation, as well as financials. Financials are also stalling out here, seeing a pretty decent pullback for names like JP Morgan, also Wells Fargo, seeing a little bit of headwinds as well. And we will see their earnings announcements over the next week or 2 weeks here, and that could actually have an impact on the broader market. But when you're kind of looking at the thematic trades that are taking place, AI as well as power, those are still relatively strong. It seems like we are still seeing the materials or the mineral space also catching a little bit of a bid as well. So higher highs, but the volume is declining. I think you're making a really good observation there that maybe we are starting to see a stalling out, and maybe the enthusiasm starting to weaken here a little bit.
Speaking of weakening enthusiasm, we're now in the third day, or you know, making our way through the third day of a government shutdown. When you think about this, how do you think about risk to investor sentiment, especially when I look at prediction markets this morning, for instance, like Kalshi? The expectation is it will be more prolonged than just a handful of days. Like the odds are increasing towards 10 days or more. What does that do to investor sentiment?
I think for right now, I mean, it's going to be a day-by-day basis. We've experienced these shutdowns in the past, or even these funding bills. It doesn't seem like they're going to go through, and then one day, obviously, we have a major breakthrough. And so I think that market is a little bit more cautiously optimistic that we're going to get a resolution here. But as time goes on, obviously, it's going to have an impact on GDP, especially it's an exponential increase as the shutdown goes longer and longer. So I think Kalshi right now is expecting around 13 days. I think that's the highest prediction as far as the probabilities at this point, but that can obviously change on a dime. We talked about the vote today in the Senate. We're going to see another vote on the GOP bill. We're going to see another vote on the Democratic bill. What you really want to see is any Democrats that actually kind of flip and vote for that stopgap spending bill for the Republicans here. And if that is the case, that probably signals that obviously we might be closer and closer to trying to at least fund the government for a short period of time. You are not seeing pressure in yields at this point. You are seeing yields kind of move to the downside. Dollar, for the most part, is actually strengthening over the last couple of trading sessions here. Once you see the yield market move to the upside, dollar moving down, equities moving down, that's where you get a little bit more concerned that this government shutdown is going to have a bigger impact on the broader equity market. Right now, it just doesn't seem like that's the case.
Let's talk a little bit about gold. Gold's been that kind of go-to safe haven, and investors have been piling in that even amid the records that we're seeing in equities. And it seems like that is a continued play throughout this government shutdown. What are you paying attention to there, KG?
Yeah, I think it's, if you kind of look at it from a technical standpoint, especially on a candlestick chart, what you're seeing is actually maybe some consolidation or maybe some profit taking. Yesterday was not actually a very good day for gold. We actually did see some aggressive selling throughout the trading session. We are bouncing back up about 0.5% here today, but you got to keep your eye out on the volume. If we start seeing volume increase on these selling days, that might be a take profit type of scenario where gold can pull back. Now, from a trend line standpoint, it has been able to hold its trend from the August lows, if you will, or close to the August lows. That's a good sign. We have seen some buyers stepping in anytime that we try to touch or even violate that trend. So once again, higher highs, higher lows. The price trend is to the upside, but you can have these aggressive movements after the party's over and said and done. The only other thing that you get concerned about when it comes to the gold market right now is that it's trading pretty much lockstep with equities. That's not usually something that does occur. I mean, in this trend or in this bull cycle that is happening, it's been going on for the last 3 months, 4 months or so, but it's not being treated as a risk-off commodity anymore. It's being treated as a risk-on commodity. So if you do get some equity pressure, maybe some institutions actually sell their gold holdings, take some profits in order to bring that into cash, which also could be a tailwind for the dollar moving to the upside here. And that's what we did see yesterday. Dollar strengthening very aggressively, gold selling off a bit. That's, once again, a sign that you really don't want to see. If we do have risk off, you'd like to see gold be that safe haven asset, not that risk off asset.
Okay, so
or risk on
Definitely
that
performing. I understand what you're saying, but performing different than usual here. Let's talk a little bit about Applied Materials. AMAT under some pressure in the pre-market here. Can you catch people up on what's causing the ding?
Yeah, you are seeing a pullback here when it comes to Applied Materials. It sold off about 3%, might be a little bit more at this point in time. They did actually file a disclosure with the SEC stating that new U.S. export rules actually did go into effect, and that will limit their ability to sell semiconductor equipment to China here. Now, they are projecting that the impact in Q4 2025 revenue could be around $110 million. But if you're looking at fiscal year 2026, the impact could be around $600 million. So that disclosure obviously is not going to be good for Applied Materials. Also, maybe some other equipment makers for these fab operations, if you will, getting kind of hit when it comes to this trade dispute between China and the United States. So this has been a stock that has been lagging, and unfortunately, it seems like some of the regulatory headwinds are still going to impact this company on a fundamental basis, which is why we are seeing the pullback to that.
Okay, let's talk about the levels that you're looking for today on the S&P 500. What are the levels you're watching to the upside and the downside, especially given that we don't have the usual, trigger that we'd be paying attention to for a day like today? It's not Jobs Friday.
It's not. Yeah, to the upside, you're looking at 6760, to the downside 6700. Keep your eye out on volatility. Equity vol, if you're looking at the VIX, is moving higher over the last couple of trading sessions. Also, credit spreads moving to the upside as well. That usually doesn't happen when equities are making new all-time highs. So we are seeing maybe some protection or some hedges being placed in the market right now for a potential pullback over the next couple of days or even weeks.
KG, quick follow-up on that. Are you seeing a unifying theme, given that the theme for today won't be jobs, or is it kind of conflicting stories across markets?
I think it definitely depends on the industries themselves. I mean, you are seeing a lot of headlines. Tesla obviously sold off pretty aggressively, but coming back to, I believe, the 9-day EMA. Let's see if some technical balance can actually happen there. That'll be a tailwind for consumer discretionary. On the energy front, it does appear that the Trump administration is also pulling back some project funding for certain states. I think there was just an announcement that $2.1 billion is actually being withheld from Illinois, or basically Chicago. So that could also impact the industrial sector as well as the power sector just in general. So I think everything is going to be news specific for specific industries, and hopefully we're able to hold up on a Friday like this, where once again one of the bull catalysts usually is that jobs report that's released.
All right, thank you, KG. That's Kevin Green, our senior markets correspondent. Appreciate that.